Hey traders, Nick Sheen here, looking at Tesla after the earnings report. Um, let's see, this is 5/3, the day after they reported, and the stock is looking down. So first, let's look at the macroeconomic conditions. Less than ideal with regards to price action. However, the fundamentals are still strong, so I'm just waiting for us to get out of this general malaise because of tariff problems and many other things that are flying in the air. First of all, interest rates that started this whole thing, but now that's less of a problem than actual tariffs and some geopolitical unrest and some dollar moves, etc. So the assumption here that the stock market in general should not fall apart. And this is where this is the glasses I'm wearing to look at Tesla right here. All right, so this chart does not show where it's going to open today, where it's going to be somewhere around 285 or so, which fits within what the options market told me I should expect. The open interest yesterday, when we looked at it, there was downside pressure towards 287 first, and then 85, and some to 279-ish. And there was no support until 272 and 265 there below. So I'm not saying it's going there. I'm just saying that the open interest gave a hint that there was downside pressure. All right, so open interest, by the way, is what the options, or the actual options positions that were open this week. That usually guides to where markets want to go. All right, having said that, let's look at the Tesla. First of all, the fundamentals. All right, so here's the thing with Tesla. I am not a fan of the stock as a car company, but I understand that it's not just a car company, it's a everything company or a whole bunch of stuff. So I'm on board with that concept. So fundamentally, I think it needs several miracles for it to grow into the valuations the way it is right now. It has hope because of a thinker, because of what Elon Musk is, which is part of this conversation too. From a stock perspective, as far as the fundamental basis for it, the bullish thesis on it is so muddled, meaning they have so many different things they can talk about: cars, panels, SpaceX, which has nothing to do with it, but it comes into play here and there, psychologically speaking. So it's Elon versus the Tesla. It's not so much Tesla, but Elon. So therein lies the risk. What if he leaves? I mean, you say, oh no, he's committed. Yeah, but people die, people disappear, people go crazy. You know, that's pretty ominous to say, but it happens. So I would be worried from that perspective. Not saying it will happen, but there are things to worry about. But to short it right now is hard because of all these different facets. So, okay, you can kill one side of the story, but what about the other? So it will take years to say, you know what, it's all going to fizzle. That's why it keeps finding support, and it has a lot of Uber fans too. So there is something to celebrate, and the dips should be opportunities for the short term until all these this bullish thesis keep disappearing. Now the problem is that they had good news this quarter. A lot of things came better than expected, and they said they're going to be gap profitable or something, which is crazy. They keep burning. The cash burn was a little lower, better than expected. I think capital expenditures were also better than expected. And then came the bizarre, as they're labeling it, the bizarre conference call. This was my first listen to the conference call, and the guy's an ass. I'm going to say it, but he is who he is, and you can't dismiss legitimate questions when you have people's money in hand and you haven't delivered on your promises. So you have to answer to legitimate questions. That's my personal opinion. But regardless, the price is going to be somewhere around here. So now we have some technical things to look at. All right, what is this white box? I'm going to zoom out to a weekly. So it shows us now every candle here is 1 week. Okay, so it shows areas of contention. Let me go to a drawing board so we can scribble scrabble. All right, so areas of contention. The big one is here, right? We got, rally, resistance here, resistance. You can call it resistance here, pretty close. Resistance, then finally breakout, right? And to an extreme. And then we fall back pretty quickly. 1, 2, 3 times more actually, but this is weekly. Several times tested that nice white box that we just saw. and that is the $300 level ish, right? And then we severely broke through it here, and here we are back right around here. That's where we stand. Okay, so if I close that, that's where we stand. I'll go back to the 1 year so we can understand where that place is. This is where that is. All right, so if we lose this zone, the 280 zone, now we can say, okay, they might want to test this low, but I usually say that we overshoot up or down. So this may have been an overshoot. So somewhere eyeball would be like here, 265, which fits with the within the open interest support. I'm not saying it's going there, but I'm saying if this fails, this would be the next place I'd look at, right? So there are opportunities. I can risk $280 and buy the shares, or I can buy some calls or call spreads in the options market, which are less money at stake, but I have to work with time in order to make sure I don't waste my money, because calls are a time asset, time sensitive asset. Or I can still sell some risk below, and this is my method here, because this way I don't have out-of-pocket exposure immediately, but I do have some income that comes in if I'm correct. So where would I place my risk? I want to place it at the worst case scenario. So not here, not here, not here, probably somewhere down here. I want to go as low as possible and as far out in time as possible, so that if there's a problem coming, I can see it coming in slow motion. I have time to put my seatbelt on. I have time to brace myself and avoid the airbag from punching me in the nose. That's the kind of trading I like to do. Boring, generating income way out of the danger zone. So the concept of trading is I can bet upside by buying the stock and risking my money right here, right now, with absolutely no buffer, or I can create some sort of a moat around my risk and distance. So I want to see that, okay, even if it falls another 20%, I can still survive with this trade. I don't sell naked puts unless I want to own the shares. So to mitigate that risk, I can do a credit put spread, or sometimes you hear it called bull put spread. All right, I'm going to sign out here. If you have any questions, you can reach out to me through email, which is sellspreads@gmail.com. Sellspreads@gmail.com. Next, signing out.